Hey traders, Jason here from Leavitt Brothers. Since my last video 2 weeks ago, the internals have deteriorated enough to sound some alarm bells. Okay, a big divergence has formed between the large caps and small caps. The advanced decline lines have weakened. New highs have weakened some, among other indicators. They're just not supportive of market strength right now. So it seems like a good time. Let's go through the charts. Let's get a read on what's going on in the market. Okay, here's the S&P 500 up top, the AD line at the NYSE down below. Currently, we have a move down to the 50-day moving average. Okay, not a huge deal. Okay, it's happened before. It happened back in 2017. It happened 3 times. But if you look closely, this move in March of 2017 led to, it happened about right here. So it led to, a month of declines. Okay, when it happened in August of the same year, again, it led to several weeks of declines. When it happened in November of the same year, okay, we got flat trading for a couple weeks. Okay, this time the AD line has moved down for an entire month, and yet the market presses higher. Okay, so this is a divergence we probably should not ignore. It doesn't mean the market's going to top here. It doesn't mean it's in bad shape. It just means looking out over a week, over 2 weeks, unless the AD line rights itself and kind of moves up and puts in a higher high, at the very least, the market's probably not going to press too much higher, and there's a good possibility that we can get a repeat of what happened last year when we just got like a 2 to 4 week decline, and the S&P dropped 50 to 100 points. Not a big deal overall, but in the near term, that would probably lead to some pretty big losses with some individual charts that are higher beta. Okay. Same indicator at the NASDAQ. The NASDAQ AD line tends to oscillate in bigger waves, okay, big ups, big downs, but the chart is trending up. The 50-day is trending up. Everything looks good here. We got higher highs and higher lows. I don't see any warnings here. So while we get warnings at the NYSE, I'm not seeing the same warnings here. So I think things are in pretty decent shape, which lends me to believe that if we did get a pullback over the next week or two, because the NASDAQ version of this chart is in decent shape, that increases the odds that the market will probably get bought up. Okay, here's the S&P 500 up top. The NYSE new highs down below. Okay, so when the market did really well at the end of last year, beginning of this year, you see new highs printed up here. Okay, then when the market, it broke down earlier this year, it traded kind of wildly in a big range. You got all these new high prints right here. You would think that with the market trending up, okay, the market's been doing this for the last couple of months. You would think we get new highs to start printing up here. Okay, makes sense, but we haven't. Obviously, they've been down here. In fact, not only are they down here, but if you look at the current print over here, it's no higher than back in July, back in May. The current print is no higher than when the market was trading back at these lows. Okay, so somehow, some way, the market's been trending up, making new highs like literally almost every week. We're making it all-time high, and yet new highs among individual stocks are severely lacking. Okay, this can persist in the near term. It cannot last overall. I know that the way the indexes are calculated, whether they're price weighted or market cap weighted, you get a stock like Apple, which is currently at new highs, and it's going to make the S&P look good. Okay, but beneath the surface, if you don't have better participation among individual stocks, the market isn't going to keep going indefinitely. Okay, there just isn't that much support. Okay, here is the S&P 500 up top. Here's the new highs, but here's the weekly version. So it takes the last chart and it kind of smooths it out with the weekly, and it also backs it up 5 years. As you can see, the current print here, not very high. Okay, during this, during the run here of, 2016, 2017, where the market was making new highs like almost every week, it just kept pressing higher. There were very few pullbacks. The little dips they lasted like a few days, a week at most, and the market just kept pressing higher. And you can see that new highs were printing, up here. Now we have a similar situation with the index, where the index is just going up, 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 up every week, printing a new high, new high, new high, and yet new highs among individual stocks are down here. Okay, it's almost reminiscent of kind of what took place right here. Okay, I'm not making any prediction, but I am just pointing out that given the strength of the market, given how the market just keeps pressing higher and higher and higher, individual stocks printing a new highs down here is a concern overall. Okay, the market can keep going like this in the near term, or I should say in the intermediate term, but it's not going to keep going like this forever unless new highs improve. And here's new highs with the Nasdaq. Okay, similar situation. So I'm going to keep my comments here to a minimum. Every time the market pressed higher, new highs would print, kind of like up here, and every time the Nasdaq underwent some sort of temporary short-term pullback, new highs printed at a much lower level. Currently we have a print down here, which is crazy, crazy low. I mean, the number of new highs right now is no better than when the market was bottoming in April and bottoming in February. I mean, it makes no sense whatsoever. I mean, I know how the indexes are calculated, so I understand how when Apple's doing really well, the market, the index can keep going up. But you just simply can't have a couple of big stocks making new highs and carrying the market higher when a lot of individual stocks below the surface are not seeing the same type of gains. Okay, it makes no sense that we can be so close to an all-time high, and yet highs among individual stocks are like down here at a multi-year low. Okay, same chart with the weekly new highs. Okay, again, you could see how when the market trended up, 2016, 2017, we got a lot of prints. Basically we got a lot of prints up here, and we got expansion new highs, then a rest, expansion new highs, then a rest, expansion new highs, then a rest, and it just kind of oscillated. It's very healthy for the market to expand, consolidate for a little bit, expand, consolidate a little bit. But over the last 6 months, we have this much lower print here. Okay, which much lower. We haven't been able to, even though we're at new highs, we can't print a higher level. It's a concern. It's a little bit reminiscent of like over here in 2015, where the market pressed higher. These are all-time highs too. This is all-time high territory, and yet new highs among individual stocks were declining, and eventually it led to, a year or more of sideways action. And that's kind of like what we're getting here. Okay, it can keep going like this for the near term, I should say intermediate term, but it's not going to go like this forever. Next chart, S&P 500 up top, bullish percent at the NYSE down below. Similar story here. Okay, when the market pressed up 16, 17, we got bullish percent prints mostly up here. Okay, the only low prints like here and here were when the market actually dipped. Boom, boom. Okay, now the market is pressing higher, all-time highs, and yet the bullish percent can't budge. Okay, so there's a lack of support below the surface. Okay, the bullish percent is the number of charts on the point and figure charts. It's number of stocks within an index that have bullish signals on their point and figure charts. And despite the market moving up and up and up, the number of stocks that have a bullish signal hasn't budged. Okay, so you'd expect a low print like this when the market undergoes some sort of correction, but when the market's pressing higher, you actually expect this thing to move up, but it's not happening. Bullish percent at the Nasdaq, similar situation. When the market pressed up, we got a lot of prints up here. Okay, the market continues to press up, but yet the bullish percent has been declining for the last several months, and right now it's down here basically at a low. I mean, this has been a dividing line. This 52.5% level has been a dividing line. Even if you extend it and just say the entire area in the low 50s is an important level, why is it so low given that the index is so high? Okay, it's something to keep an eye on. You just simply can't have a situation where less and less stocks are participating. Okay, it doesn't mean the market's going to crash, but if you look at other instances when we got like divergences and low prints, what you got is like sideways motion for a couple months. Okay, we got a divergence over here and we got sideways movement. Okay, so if this divergence doesn't right itself pretty soon, if it doesn't move up, who knows? Maybe we can just kind of have like this kind of motion or movement, I should say, for the next month or so. Something to keep in mind. Okay, a couple other random charts here. Up top is the NASDAQ, it's percentage of NASDAQ 100 stocks that are above their 200-day moving average. Down below is the percentage of NASDAQ stocks above their 200-day moving average. Okay, so obviously the NASDAQ 100 is going to be your higher quality stocks, your Amazons, your Apples, your Costco's, those types of stocks. Whereas your NASDAQ stocks are going to include all those, but they're going to be some lower quality stocks. So when you see here that 62% of NASDAQ 100 stocks are above their 200-day moving average, but only 46% of NASDAQ stocks are above their 200-day moving average, that tells you that money is rotating out of smaller, more speculative names and going into the bigger cap, more stable companies. Okay, subtle hint beneath the surface. It could persist for a while, but it just kind of gives you a hint of what's going on. Beneath the surface. Tops take time to form, and this is one of those subtle hints that clues you in that like maybe we don't have a top forming right now, but we probably would have one, coming some point in time in the future. Okay, another chart. One more, SP 500 up top. We have new highs at the NYSE in the middle, new lows at the NYSE down below. Just want to point out, new highs have been declining, new lows have been increasing, even though the market has been going up, making new highs virtually almost every week. And if you look at the scale here, it's not that the scale over here is like 100, 200, 300, 400, and the scale over here is like 5, 10, 15, 20. So these charts are actually drawn proportionally. Right now, the market is, basically at a new high, and yet new lows are 140, 150, 160, and new lows are 140, 150, 160. New highs are they're not even at 100. So somehow the market's going up, and the new highs are nowhere to be found. Okay, so if I were to sum all this up, it seems like a top is forming. Okay, but tops take time to form, perhaps an entire year. Okay, if you were around during the dot-com bubble days, you know that a top formed in early 2000, but yet 6-7 months later, the S&P pretty much matched its high, and then it headed south from there. During the financial crisis, the market topped in June, July of 2007, but then 13-14 months later, the S&P was only down 100 points. So biggest financial crisis unfolding, since the Great Depression, and it took 14 months, and the S&P was only down 100 points. Okay, so tops take time to form. So I'm saying a top could be forming here. It seems like it is. The type of divergences I'm seeing here, the lack of participation, tells me that a top is probably forming, but tops take time to form, perhaps an entire year. So the market can certainly do well into the end of this year and into 2019, but at some point in time next spring, unless the conditions I've outlined here improve, the market will probably head south with some force. Okay, we actually will have an actual top in place and a tradable move down. Okay, that's it. Thanks for listening. If you liked the video and want me to do more, give it a like and share it with your trading friends. You can also subscribe to the channel right here at YouTube. Come check us out at Leavitt Brothers, where we provide trading ideas, market analysis to independent traders, funds, financial advisors. Again, thanks for listening, and I'll see you next time.